Hi, this is Kevin McPartland, Senior Analyst with TABB Group, and I'm here with Peter Duffy, the CTO of Sumerian. Now, bandwidth has gotten huge, and it's gotten relatively cheap, and data rates continue to climb, which is why people are using so much bandwidth. But even if you have the bandwidth to take in all of this data, how can you be sure that your systems and your servers are going to be able to handle the fire hose?
Yeah, I think that's a very good question, Kevin. That's something that we see with a lot of our customers, and the question that they're being asked by the business is, how many quotes can we push through our FX flow? How many orders can we push through our equity system? How much market data can we bring in based on the infrastructure that we currently have in place? And if I want to double the volume of that FX flow business, or if I want to double the volume of that equities flow business, where do I have to invest to make sure that I can deal with the volume of ticks, with the volume of orders, with the volume of client connectivity, with the volume of exchange connectivity?
Sure, because just throwing servers at the problem, you can't measure it, and it's just not an efficient answer anymore.
Yeah, I think that's exactly it. And lots of people, when they look at this capacity issue, they've traditionally looked at, how much CPU am I using, how much disk space, how much network bandwidth am I using, but they don't relate that back to the trading volumes that they're actually doing. So what you really need to do is you have to understand what you're doing at the infrastructure level, how much CPU, how much network bandwidth, but you have to understand how does that relate to the volume of quotes or the volume of trades. If you like, what you're trying to find out is what's the footprint of an individual order or an individual trade across all of the platforms that it has to touch in terms of bandwidth, storage, CPU, grid processing power, all of that.
And then I assume that even then digs into the next level, into the proprietary applications that some of these firms are using, and how they manage the data and how they process the quotes and how they utilize the CPU.
Yeah, absolutely that. And you have to understand, if you're seeing a bottleneck in terms of the throughput that you can sustain, is that bottleneck there because you're running out of underlying system resources, or is that bottleneck there because there's a problem within the algorithm itself, within the way that you're processing the data, that you're building up a queue that takes too long to process each time? And our analytics can give some visibility into that to understand what is that relationship between the trade volume, the performance, and the underlying utilization of the infrastructure.
And I can see there could be huge demand for this in the coming years, even away from the traditional listed products, where as OTC derivatives become more standardized and are pushed onto electronically traded markets, people are going to have to figure out, how do we do this high volume, low margin business as opposed to before when it was a low volume, high margin business.
That's exactly it. And if you are doing a high volume, low margin business, then you don't want to be massively over invested in the infrastructure. You don't want to have 3 times more the capacity than you actually need. So you have to really understand, what capacity do I need, so that you can sweat those assets effectively, understand that you're running with maybe 15% headroom, but that's good enough, and then understand that if you are starting to grow business, which part of that complex infrastructure end to end should you invest in? Where do you get the biggest bang for your buck, basically?
So yeah, TABB Group research actually showed that the sell side in their equities infrastructure tries to keep their utilization at only about 30%. Yeah. That's a huge, the estimates were about $30 million that cost them annually to keep that extra capacity, and if they need it, but if they have a way to measure it and better predict what they will need, that could help alleviate some of that extra spend.
That's absolutely it. And I guess capacity and performance are two sides of the same coin. In many cases, these companies are over-investing in the hardware because they want to make sure they can keep the performance at the appropriate levels. If you can get the analytics right, if you can understand what the relationship is between the business volumes, the end-to-end performance, and the utilization of that infrastructure, then you can afford to run at much higher than 30% utilization, and therefore realise quite significant savings in that sort of low margin business.
It's about being smarter with what you already have.
It's about being smarter, it's about understanding those relationships, and applying some sort of smart intelligence to that.
That's great. It sounds like that. I mean, that's something that the banks really need to spend some time focusing on and understanding.
We're finding that from our client base. When they understand that, we've been able to get people 3-4 increases in the headroom they have available, so they can really target their investment to the right places.
That's great. Very interesting stuff. Thanks for being here. Again, this is Kevin McPartland, Senior Analyst with TABB Group. I'm here with Peter Duffy, CTO of Sumerian. Thanks for watching.